Hey everyone, excited to be back for this week's edition of Frequently Asked Questions for Commercial Real Estate. In today's video, what I wanted to do was talk about some of the statements that I hear some investors make about finding opportunities. And so oftentimes I hear prospective investors make these statements, and ultimately they end up either not buying anything at all, or they wait around for a very long time before they actually make a purchase, which ultimately, in my opinion, damages their potential to make more money in the future. And so hopefully by listening to this video, you'll learn how to potentially overcome some of these limiting thoughts and limiting beliefs so that if you yourself want to invest in commercial property, you're able to do so more seamlessly. Now, before we dive in this video, I'd greatly appreciate if you can like and subscribe to this channel. It really does help with the YouTube algorithm and ensures more and more people can hear this message and learn about the many facets of commercial real estate. So now you've done that, go ahead and like and subscribe below. Let's go ahead and dive into this episode. All right. So in today's video, what I'm going to do is I'm going to share three statements that I hear some investors make pertaining to purchasing commercial property. Now, I'm going to preface this by saying that I myself am a commercial broker. So there's probably some people out there that believe that because I'm making these statements, I'm kind of biased because I only make money if people buy, sell, or lease commercial property. That myself is not the case. I actually also buy commercial property, and my goal is to continue to grow my portfolio both on the investment side and also branching off into development as well. So I hopefully I'm coming from a perspective of someone who is a practitioner so that I can provide additional context to what I'm going to be saying in this video. So just kind of prefacing that. So to start off, there's several statements that I've heard potential investors make about buying commercial real estate. And one of the more common ones that I've heard, in particular over the last several years, has been, how do I convince a seller or a broker or whoever else to go with the math that I have formulated? So, oftentimes you'll get a spreadsheet from an investor after you send them an OM, or maybe you present them with some of the data points, and they plug it into their spreadsheet and says, well, the numbers don't pencil. We need to be at this price, and because of that, we need to convince the seller that this is an acceptable price that they have to go with. And so my counter to that argument oftentimes is that, just because those numbers are what you feel comfortable with, because again, the buying decision is your comfort level with making a decision to move forward with a transaction. Just because that is the way that you view it doesn't mean that another person out there in the marketplace cannot pay more for that particular property. And as someone who is a fiduciary to the seller or the people that I ultimately am representing, my job is to get the highest possible price for that property. So there may very well be other individuals out there or groups or entities that can pay more for the property because maybe they're vertically integrated. Maybe they have a construction teams on site, so they're able to lower the cost of turning over units if you're talking about multifamily. Maybe they're owner users. Maybe they want to be in the building, and therefore they're going to be able to pay a lot more than an investor will. Maybe they have another strategy that they've implemented with other properties, and maybe they have a bunch of properties in a cluster nearby, and ultimately this is another notch on their belt when it comes to the area. So you just never know what type of users are out there that could potentially pay more for the property. So oftentimes when I hear this statement about the numbers don't pencil, I kind of probe a little bit to get an understanding, because often there's sometimes definitely where the math just doesn't make sense and the seller's expectations is out of whack. But in reality, oftentimes there are people out there that are willing to pay more. So just because the math doesn't pencil for you, it could very well pencil for other people. So that's just one statement that I often hear that I wanted to kind of debunk. And I think it is holding back a lot of people from making investments because they're kind of waiting for the perfect property to come along. So that's number one. Number two is in our investors who try to eliminate or get rid of all risks all risks altogether. So they may be looking at a property and say, it's in a good location. I like the tenant mix. I like all these things about it, but maybe the roof is, near half its life. So they want to say, okay, well, I need to set aside half the roof cost to be able to pay for the roof in the future. Or, there's some potholes or in the parking lot, so I want to be able to request a full replacement of the parking lot. Oh, maybe some of the tenants, their leases are starting to come up, and so now I'm not going to count that income for them, and then essentially, say that space is vacant, so that when it does, if it does become vacant, then I can actually be able to, backfill it relatively easily because I paid a price that supported that income and not the income of the vacant space. And so because of their desire to try to eliminate all risk, oftentimes they price themselves out of the market. Now, I will say that there's inherent risk in any type of investment you make. And I don't want to make light of the fact that you have to really be comfortable with the decision you make. Because again, these are big dollar figures. And oftentimes, if you make a bad decision, it could definitely hurt you in the long run. But there is no way to eliminate risk in any type of investing. I'm of the belief of that, but you can take calculated risks. So in a scenario whereby, you have some of these scenarios, or you have some of these, issues with the property as you perceive them to be, there may be ways that you can mitigate them in other ways to be able to just to continue to be competitive as far as your offer price, or maybe, the terms that you're offering to the prospective seller, and ultimately be able to secure the property. Because again, we're in the capital accumulation game. Over time, you're going to be able to build up a portfolio such that, the property maybe today is worth X, but in 10 years or 15 years, if you buy right, it could be worth 2X or 3X what you have currently. So think about that from that perspective is very helpful in that regard. So, regarding the idea of how can I fully eliminate risk, I take the mindset that you can't, but you can do your best to try to mitigate some of it, but understand that at the end of the day, there's going to be risk involved with making a decision, and you can't let that stop you from trying to move forward with a transaction. Because if you keep doing that over and over and over again over a period of years, you're never going to buy anything, and you're going to be in the same place you were before. So that's number 2. And number 3, this is something I often hear from investors, is that it has to be a great deal. It has to really be a home run for me to even consider buying it. And so I don't deny that trying to buy a home run is awesome, because for a fact you're going to be able to make money on the investment over a long period of time, and it makes you feel good knowing that you got it at a very reduced price. So I don't argue the fact that getting a home run deal is a good thing. I think it's a phenomenal thing. Now, the problem is there's not a whole lot of home run deals out there, because most of the people in the marketplace, in particular, if they're going to be represented by investors, or even those who aren't represented by investors, but they own other commercial property, they're relatively sophisticated. They know they know for the most part what their property could be worth. So being able to get it at a 20% reduced price, or 30% reduced price, or sometimes even 40% reduced price is going to be very difficult to do. So similar to the example of, taking risks, if you decide to wait around for that home run deal to come along, you may be sitting on the sidelines for 2 years, 3 years, 4 years, 5 years before that deal comes along. And when you buy that deal, it's going to be great. But take the logic of another person. There's an example that a friend of mine, Bo Beery, multifamily broker out of Florida, often says, is that we're in the capital accumulation game. So really the best investors that he's worked with that have accumulated the most assets are looking for singles and doubles, if to use a baseball analogy. They buy a little bit under market here, they buy close to market here. Now a home run deal comes along and they take that advantage of that. Now it's like 20 to 30% under what the actual market rate is. And what ends up happening is that over a 20 to 30 year period, now they have this massive portfolio of real estate that they've owned. They've been able to stabilize. And as a result, they're in a very, very good position. But if you take the same approach of saying, look, I only want to buy home runs, you may buy a property every 3 years or every 4 years. So by the 20-year hold, but once the 20-year period is up, you only have 4 properties or 5 properties. So is that really going to be game changing for you over a period of time? Maybe, maybe not. But in reality, if you're able to modify your approach and say, look, I want to not buy silly, I don't want to buy something way overpriced that's going to take me forever to try to recoup. But if I find myself in a position where I'm able to buy something at slightly below market, and I like the area, I like the prospects, I have a good business plan to implement that could potentially benefit me in the long run in that area, I say pull the trigger. Don't wait around for the home run deal every single time, because it's only going to just be a disservice to you in the long run. So hopefully you gain some value from this video. I'd love to hear your guys' take on the video, and also maybe hear a little bit about some of the statements you've heard from investors that have reached out to you, or maybe you're an investor and you're looking for opportunities, and maybe some of the statements you share with brokers and other investors as well. Love to be able to hear that in the comments. Along with that, if you guys like this channel, please like and subscribe. It makes a huge impact in our ability to reach a broader audience, and we would greatly appreciate the support. So thanks again so much for tuning in, and we'll see you all next time.